Well, good weekend, all. Ira Epstein with your financial market wrap-up. This is your weekly edition, so we'll be looking at the weekly charts, if you will. We'll start off with one monthly chart and move the rest of the things to the weekly. And this is Friday, the 16th of September, 2022. All right. So a week ago today, my recommendation here was strong, not to go through the CPI report, that the volatility would be too large and you can get your head handed to you. I think I was dead right. Since last Monday, the market has done one thing in most financial arenas. You've seen interest rates go up rather dramatically. The curve yield moved back out from getting under 10 at one point to 210s, back up to the near 50 level one more time. We are looking at the stock market having, 5 days in a row down, pretty hefty break overall. The bulls that thought the market would go on to challenge the highs, I think they have been basically wiped off the planet. The Fed talk is now going to be a Fed that has to stay very strong because none of the numbers so far that are coming out on inflation show that it has yet gone and turned itself to the downside. What it has done, and I think I'd agree with others, and would agree with them, that the rate of pace of increase has slowed dramatically, but the core CPI, their favorite number, hasn't yet. And they are talking of getting that thing in half from where it's at right now, and that's going to take a lot of interest rates. The realistic number to get over that core CPI, you have to go to about 4.5%. It's not, you don't have to go get your master's or your doctorate to see that, okay? If the Fed wants to be over the inflation rate, that's where it has to go. Now, if that starts to drop and starts showing that it can keep dropping, then they don't have to go that high. But they're not going to be under it to start with. They're trying to gear for that. And then if that starts coming down and they're still in some form of a raising mode, you get into these pauses. You can get to a quarter-point hike instead of a 75 or even talk of a 100. That's what's going to happen over time. Along the way, because the jobs market is so strong, it's going to be hard to break inflation. People are getting well-paying jobs, well-paying. There's still signs everywhere I look, hiring. And if that's the case, they'll have money in their pocket, and as the goods price stabilizes in time, you keep inflation sticky because people have the money to pay for it. Now, I'm always amazed. I watch Amazon and the sales. Just before I was doing this, I see that they're starting to mark down electric scooters. They're starting to mark down expensive bikes. Don't get me wrong, $5,000 electric bikes, but they're $850 off. So things are starting to happen at different levels. And that scooter was only a $399 scooter. I don't ride them, but I look at these things because it gives me an idea what has to be done to move products. Now, for what we'll do here, we're going to start off with a monthly chart. This is the 18-month moving average of closes. The reality is, once this market moved underneath that number, and it was literally at the beginning of this year, the bias changed on the very large picture. I find it impossible to take the risk that a monthly chart requires to make trades off it. But I love to look at it because it tells me what the very large picture is. I find it much easier that if you're going to do anything like that, we can go to the weekly chart. Now, on the weekly chart, the resistance is now $39.95. What you have to pay attention to is what was last week's high in the market, the settlements right up here. That was 40.77 So until that is taken out, my guess is on rallies, the pros want to go short the market with stops over that point, because if you get over that point again, we got to ask ourselves, why? What does it mean? More likely, coming from there, you could be saying, hey, I'm going to go for this June low. Why not? I have stayed in the camp. Doesn't mean I'm right. We haven't gone back there, that you're going to retest that number. Simple fact is the Fed has to raise interest rates. The naysayers can talk all they want about the market coming down, recession. You can't have a deep recession if labor stays this strong. Don't know how else to say it, all right? Housing market's hurt. You've gone from 2 months supplies to 4 months, from 2 months to sell a house to 4 months to sell a house, but they're still selling. Okay, mortgages, they're over 6% now. So the average person may not be able to buy, but it keeps the rental market on fire. They have no choice. They got to live somewhere. That's what's been going on. When we come to just a bar chart, I look at this and I can see that the bounce, now the break, and if you go back down to where the break low was, and that's logical as a chartist, you're back into that 3,600 plus range. When I look at the chart action today, I like outside days, outside weeks. They start telling you stories. Normally, this is all I can tell you. If you go back and you do counts, just look at your charts. You normally don't take out the high of an outside week for at least 2 weeks after it's accomplished. I didn't say it has to go back and take it out at all. I just said normally don't. If you do, something has changed. Some fundamental in the market changed. I've done studies on it, and I'm very convinced of that. So I don't think you're going back over this week's high for a long time, of 41.58. I think when we look at moving averages, you have resistance at the 100-week, right up here in the green. You also have the 18-week. I think that if you rallied, I think the pros would be willing to sell into that and risk that 100 points in some manner, way, shape, or form. One potential number to get down to could be the 200-week average. And then the Bollinger Bands fit in right here, and they're at the 36.83 level. That's the more likely target that would try to hold the market if it breaks down there. I could be wrong. It may never break down there. When we get over to here, the slow stochastics, they have turned down. So what we have is a market that's got first the bias down. Whenever you close under the 18-week average, the bias is under. When you close over it, the bias is above it. It's a filter on the swing line. Is that bullish, bearish, and does it concur with it? It does. And is momentum pointing down? Not in oversold territory on normal charts, and you're not. So everything on this chart to me is very much in the bear camp. When I look at the Dow Jones Industrials, I have the same picture. I have lower highs, lower lows. I have an outside week down. I'll sit with what I just said. I think the pros will be willing sellers up to that number, targeting the combination as a downside target of 29,848 to 29,685. Take out this week's high, and I have to go back to the drawing board. In the NASDAQ, same picture. And again, your 200-week and the lower Bollinger Band potential targets, they're just sitting right on each other at 11,136. I don't want to see this week's high taken out. If it is, then there's something else amiss here. And momentum certainly pointing down. Everything bearish there. Okay, we haven't yet done that pattern in the Russell. The Russell still has higher lows, higher highs, and the small caps are saying, you know, I don't know that I want to be all that bearish. Now, they could be the late party comer if they take out the week before's low. That low right here was 1778.70. So if that is taken out, they sort of come to the party a little bit late. But if they don't, then I have to flip around and say the bulls are still in control of this market. They're damaged. But any close back over 1833 on a weekly basis gives them control of the market again. So pay close attention to it. This is the one to not be short. Does that make sense? This is the strongest of the group at this point. When we get to the 30-year bonds, how many weeks in a row have you made a lower low every single week? Now, I am not looking for this market to stay under the lower Bollinger Band very much. 95% of the time, the market will stay within the bands, not under. If you don't understand that, at the end of this, I'll run my ad for the Bollinger Band course. It's a 13-chapter video course. You will finish it in a few days. You will have a whole new understanding of this, and you'll learn how to tie your slow stochastics with it. So let me go back with you and talk about that. When you got up to the upper band here, what did you do? You ran out of momentum. You hit the lower band here, you're running. It's similar to what you did here, but you don't stay under the band. You get opportunities to go short if you get what's called an embedded reading, which you don't have. So I'm of the opinion that this big break could pause out with this next Fed hike on Wednesday. I don't care if it's 75 or 100 basis points. I think the momentum of the event runs out of steam at that point. That's not to say interest rates can't grind higher. But In order for that to happen, the Fed has to still stay data dependent, as they said. We're going to need to see other CPI numbers and either go, it's still not slipping, so the Fed gets more aggressive, or no, we got the first shot at it, maybe the market doesn't have to get that aggressive. I hope you buy into that theory, because that's what I see. In the 10-year notes, it's identical to the 30, no difference at all, going from upper band, lower band. Be careful, you could bounce. It is pushing the band out, and it's doing it smartly. You hit it, you get a week under, then you probably get a week back over to the right-hand side. In the dollar index on a weekly chart, the market's got higher lows, and it has had these for a very long time. It has kept you in the bull mode, higher lows all the way through, higher highs. You have not been able to get back under the 18-week average of closes. And now, what are we doing with the slow stochastic? So let's go here. We know this week both numbers were over 80. Last week, both were over 80. What about the week before? Over 80. So this tells me that I'm embedded. I've locked in the momentum. And until the red line closes under 79 on a weekly basis, I think the pros will buy the breaks, looking for the Bollinger Band until that changes. That means it's the flip-flop in one way when you look at the eurocurrency, or is it? Not completely the same chart. This broke away from that pattern. Here you've got a higher high and a lower low. Do we have the embedded reading? Well, I think you do. Week one right here. The week before, both numbers under 20 and under 20. So what do I think on this one? I think the pros are selling these rallies, looking for the euro to continue down and go back to the lows possibly of that 98 zone. I am wrong in my thinking if the red line closes over 21 on a weekly basis. Fair enough? In the Canadian dollar, clear cut, lower highs, lower lows, riding the lower Bollinger Band, momentum down, trend down, but not a good place to go short. Do I want you to sell a T-bond against the Bollinger Band? No. Do I want you to sell the Canadian against it? No. Again, if you take the course, you understand the logic of it, what's going on. I'd rather not trade. There's always another trade down the road. This is a strange week, too. Because of the CPI, after I did a couple of trades in the yen and the corn, I backed away on everything this week and haven't put anything out in the last 2-3 days because the setups aren't there. I prefer to get rid of the name on the chart. And I do it. When I teach courses, a lot of times I get rid of the name. Do you want to know why? I'm just looking at the chart pattern. As long as I know approximately what the value of a move is, in other words, a tick, I'm done. I don't care about the rest of it. I could care little about it, to be honest with you. I certainly don't want to go through major reports. That I do care about. But as for everything else, nah, you're a pattern trader if you're a chartist. In the Japanese yen, this is a market that the government keeps giving us indications. They could be head fakes, like in basketball, indications that they want to know the rate at the central banks because they're thinking of buying yen. Well, they've talked up the value of the yen on that, but by the end of the week, it slipped back. Intervention doesn't work. I want to make that clear. They can get the market up sharply. You can get a 10% rally like that, maybe more, on an intervention, surprise intervention. Will it hold? No. What will hold it? Because the other bankers, the other traders are bigger than they are. Everybody will say, that was my gift. Get in. They haven't changed their policies at all. They're intervening. They'll blow through their reserves. So we have to see a government change where they give a nod that their policies have changed, not that they just want to support that. Is there a trend trade here? No. Do I want you selling against a Bollinger Band? Never. I don't see a thing to do on a weekly chart. Now, Bitcoin, this was the big week. The merge happened, Ethereum. And instead of it taking off, is report after report that I get is telling you, it's going to go up. This is the event. Be ready. It fell. You've got to laugh. I always get beaten up because I have friends and they're all in these things and they tell me, you don't know what you're talking, what you're missing. I go, I don't think it's worth anything. I don't understand what you can use it for other than to speculate. If I get gold, as much as I don't believe gold works in this inflation environment, I got a coin that's universal, whatever it is. I can go anywhere, convert it right then and there to whatever I want. I cannot go to Starbucks with my gold coin and get that. I cannot use Bitcoin to do the same thing. That's it. They are both storage of money. So I know you can convert your Bitcoin in your account and do it. Not quite as easy as I can do it with gold in different places, because let's face it, there's a lot of gold shops and silver shops and jewelers around that you can do that with. But you can dump your Bitcoin pretty easy too. What this is the Wild West, and it needs regulation, and it's happening. It's not going to happen, not going to happen down the road. Now, it's all happening. A good thing. Since everybody wants it to succeed, let it succeed. Just make it a fair playing game. And that is happening. And like every technology, Bitcoin is a great chain. The chain behind all this is phenomenal. It's got big time potential. All right? I don't know that I agree with the coin. I don't know that I agree with NFTs. That's my own thing. All right. In any case, the chart action has been drifting in and out. You got higher high and low. It's paying attention to serious resistance at the 200-week average in gray and the red, the 18. Momentum is still to the downside. Is the market embedded? So let's take a look. Both numbers under 20, both under 20, but what about the week before? Both under 20. So until the red line closes over 21, I say the pros are hitting the market on the rallies. They'll bail if that happens because momentum turns generally before price. In the Brent WTI, just sort of stuck here at the $6 range, not doing anything. Today, you had a rally early in the day in the energies, and I was wondering what was going on. Well, as it turns out, in Iraq, one of their oil areas, the terminal areas, they had a major spill. And at first, it looked like it was going to put that area out of commission for quite a while. By late in the day, they said it wasn't as bad as thought, and it'll be up and running quicker. So that kept some pressure on the market. Is this trending? No. What's it doing? It has got momentum still down. It is riding the lower Bollinger Band, and it is staying with the downside bias as it stays underneath the 18-week average. This market is going to get OPEC Plus pissed, and they are going to keep telling you they're overproducing for the market situation with economy slowing. And I think they're going to continue to cut production. I think that when the U.S. finally stops its SPR program, which is coming, I think, in October, that'll take 1 million barrels a day out of the market supply. And if the U.S. at the same time starts to buy, let me change that phrase for you, starts to buy oil to replace it in the SPR, well, that gets very interesting altogether. Do I see anything else fresh on it? Not that. I see support, big one, 77.06, 77.91. Then in rebob gasoline, to me, this is an important area too. I'm sorry about the ringing back there, but if I go to fix that, then I'm off camera. In looking at it, lower highs, lower lows, but into the first major support zone. So what do you do with that? Well, you still have your embedded reading. If you lose the embedded reading, then I think you're going to make a run back to the 18-week average of closes. But you haven't done that yet, so I still have the bearish bias. You keep hearing me talk about if you lose the embedded reading against the Bollinger Band, what happens? Learn about that. Watch this video, take the course, get an education on it. Works, in my opinion, ETFs, spiders, stocks, futures markets. If you can chart it, if you can put slow stochastics and a Bollinger Band on it, I don't care what the market is. I think it works. I've used it on so many different types of charts. I'm Ira Epstein. You have yourself a great day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.